Hello traders and welcome to the third lesson for our trading webinar series. And before begin, I would like to encourage you once again to please join our uh, Telegram channel. It is dedicated for OctaFX Filipino traders. You can also invite your friends or someone you may know who are interested to join our community. So in that channel, you will have a chance to get the latest trends, the latest news, some education, trading education, and trading ideas. Okay, so again, before begin, I would like to remind everyone that we are going to draw again the winners from our previous winners from my question, and again, the one or the number that will be picked will be the winner, and he will be credited $100 for his or her trading account. All right, and let's just wait for a few minutes to let other participants join. So good morning, good afternoon, and good evening to everyone wherever you are today. So hello to JP Ramos, hello to God's Time, Abu Sir Market Mogul, hello to Aishwarya. I'm sorry if I can't read your username right. Hello to dodzkie, hello to Shailendra at 99. Good evening to you as well, God's Time. Okay, so before we draw our winner, so I want to remind everyone to please be with us up to the last episode or last part of our series, because in this webinar you will have a chance to have a training certificate. Once you finish our webinar, you will be credited with a certificate, a training certificate, and you will also have a chance to have a 100% bonus. And last up to our last webinar, you can get a chance to win $100 on your live trading account. All you have to do is to answer my question at each every webinar together with your live trading account number. And of course, you will have the right knowledge for you to be able to trade profitably. So I will on our upcoming webinars, I will teach you my own trading strategy that I've been using for the past 5 years. And hopefully I could bring value to you, and hopefully you will be a successful trader as well. All right, so let's just wait for a few minutes before we start drawing our numbers. So, by the way, we only have 5 winners. So, if you are someone who answered the right answer, but unfortunately your answer didn't show up on our live chat, maybe your internet connection is weak. So, please check on your internet connection again later for you to be able to join our Q&A. Okay? Hello to Banbari Lal. Good evening to you as well. Good evening again, Aishwarya. So I hope everyone is doing fine. So for our today's webinar, we will talk about some of the important lessons in trading, especially if you are a beginner. We will talk about the candlestick chart reading. We will talk about entry candlestick patterns, bullish and bearish candlestick pattern. We will also talk about support and resistance zone, where to find them, and trend lines and channels, as well as trading oscillators. And on Friday, please be with us again, because we are going to talk about how to look for an important market structure. So, of course, if you already know how to plot support and resistance, the next question is where to look for those important levels on the chart, right? Because it is not enough to learn just the basic candlestick pattern. For example, the pin bar, the engulfing candle, it is not enough. We need to put in the context, and we need to trade those candlestick patterns inside the zone, the important zone. Okay, so please stay tuned with us up to the or up to the last part of this webinar for you to be able to learn about those things. All right, so let's wait for let's say 4 minutes. So let's wait for 4 minutes to let our other participants join our today's webinar and for them to also see if they won with our draw. Okay? So hello to Sir YJ007. Good morning to you. Hello to Samuel Josephson. Good evening to you as well, Julie Egloso. By the way, if you want to have more of this for our Filipino traders, what you can do is to help us share our webinars. You can like and share this video. You may also invite your friends to join us on our Telegram channel for us to be able to have more upcoming webinars. And who knows, maybe we can have a Tagalog webinar in the future. So hopefully. But today, of course, we should enjoy what OctaFX is giving us. It's a free education after all, right? Good evening to you as well, Mark Junicio, and welcome back. I can't remember when was the last time I saw you. So it's good to have you back today, Mark Junicio. So let's just wait for 3 minutes before starting the draw. So for those who are asking about the draw, if you answered right and you aren't part of the winners, so maybe your internet connection is weak during our previous webinar when you answered our question. So please make sure that your internet connection is stable for you to be part of our Q&A later. So you can see the draw list names or the list of the winners on our description box. So I'm sorry if you answered right, but you aren't being part of the person who answered right because maybe your internet connection is weak. So please take care or be sure that your internet connection is stable later. Hello, Dadsky. Yeah. Yes, you are number 3. Hello, Julie Igloso. So you are asking about withdrawal. You may look on our website on the available deposit and withdrawal methods for you to be able to. I think Gcash is if you have the Gcash card. I'm not sure, but you may check. So if you think your internet connection is doing well, but your answer isn't showing up on the live chat, I think you can put multiple right answers for us to be able to make sure that you will be part of the the people who answered correctly. Okay, so it is already 7:11. So let's now start the draw. So we have 5 correct answers. So let's start. So 5, 4, 3, 2, 1. So there you go. The winner is number 2. So congratulations to number 2. And number 2 is Sam Daniel Damasco. So congratulations to you if you are here with us today. So please comment something. Again, the winner is Sam Daniel Damasco. So our team will reach out to you and we will credit your $100 to your live trading account. Hello, Aishwarya. The webinar is normally it will last up to just 1 hour. So maybe 8:30. We will end at 8 or 8:30. So again, congratulations to our winner, which is number 2. So please keep in touch. Our team will reach out to you and you will have your $100 credited to your live trading account. All right, so let's now move on our webinar today. So again, I want to welcome everyone and thank you for joining us at the start of our webinar today. And what we are going to talk about is tools for technical analysis. And I believe this is one of the most requested topic in trading, especially for the beginner traders. So to start, so of course, before learning how to trade or before learning how to look in the chart, we should know the basic, such as the anatomy of the candlestick, right? So candlestick is a type of price chart used in technical analysis that displays the high. So remember this, displays the high, low, open and closing price of a security for a specific period. So the candlestick pattern or a candlestick simply has a two part. The first one is the body. As we can see, this is the body. And this one right here is what we call a shadow, or we can also call it a wick. Okay? So if we have a bullish candle, means a white candle or a green candle, for most of us traders, we are using a green candle, right? For a bullish candle. So the opening price of a green candle or a bullish candle is here below. And then the price or a candlestick is forming like, again, a high or a open high. It will go as high as here. Then this will be the wick or shadow. And then once the price reach its highest point, then it will go down to its lowest point to create another wick. And then finally, it will close somewhere around this level. So this is where the price opened. And this is where the price closed. Okay, so again, to recap, if we have a bullish candle or a green candle, it is opening below here, and then it is going up as high as here. So let's say it opened at around $2, and then it went up to 5. Then after reaching its peak, it will go down to its lowest price. So let's say its lowest price is $1. And then finally, it will close at its closing price, which is, let's say, a $4. At $4. Okay. So basically, it is opening below and then closing at the top for a bullish candle. So again, it is the formation is open, high, low, and then finally close. Okay, and the opposite is true for a bearish candle or a red candle. The normal thing for this one, or what this candle normally do, is to open at the top and then go as high as here, and then it will form its lowest point, And then finally, it will close, let's say, around this level. So it is just the opposite of a bullish candle. It is opening at the top, and then it is closing at the bottom. So that's why it's called a bearish candle, because it is closing below the opening price. And for the bullish candle, it is closing above the opening price. And again, the highest wick or the highest price is here, while the lowest price is here. So it will open at, let's say, 4, and then it will go as high as 5, then it will go down to 1 before finally closing at 2. So that means if we have a bearish candle, then that means the price went down. And if we have a bullish candle, then that means the price went up. Okay, so bullish candle is good for long trades. If you are looking to buy, then you should look for a bullish candle. And if you are looking to sell or to take a short trade, then you should look for a bearish candle. And candlestick is forming on different time frames, and you may look for each and every candlestick pattern in every time frame. So for example, here at the daily time frame, so we have a 24-hour opening and closing price, or opening and closing time before a candle open and close. So for example, this big green candle right here, so this one opened below here. So as we can see, this candle don't have a wick, so that's normal. So it opened right here, and then it went as high as here, and then finally closed at this level. So this formation or this candlestick formed at exactly 24 hours or 1 day. Okay, and for let's say we move down to 4-hour time frame, then that means each and every candlestick will form every 4 hours. So let's say, for example, this green candle here, so it opened below, and then it went as high as here, and then it went as low as its lowest price right here, and then finally closed at this price level. So this candle formed at exactly 4 hours. So let's say it opened at 4 p.m. and then it will close at 8 p.m. Okay, so that's how a candlestick is working. And if we go down to 1 hour, then that means each and every candlestick is opening and closing at every 1 hour. So this candle will open and close at 1 hour. So let's say this candle close at 4 or open at 4, it will close at 5. Okay? So that's how a candlestick is working. So, and then if we have a bearish candle, then of course it is the opposite of it. So this candle opened right here, and then it went as high as here, and then it went down up to its lowest price. So as we can see, we have our wick down here. It's not that big, but we can see we have it right here. So this is the lowest point. So we have our highest point right here, our opening price right here, and then finally the price closed at this level. And this candle formed at 1 hour. So that means if this candle opened right here at 4, it will close down here at 5. All right, so basically that's how a candlestick is forming, and that's how a candlestick works. Okay, so now that we know what a candlestick is, so again, please remember this one. Candlestick is a type of price chart used in technical analysis that displays the high, the low, open, and closing price of a security for a specific period. So specific period means that if you are trading on a 5-minute time frame, then that means each and every candlestick is opening and closing at every 5 minutes. If you are on a daily time frame, it is closing each 24 hours or every day, every 1 day. If you are on a 1 hour time frame, it is opening and closing every 1 hour. So that's basically how a candlestick is working, or how it works. Okay. So always remember that high, low, open, and close is very important, especially if you are a day trader. So now that we know how candlesticks are forming, so let's now study the different types of candlestick patterns. So a candlestick pattern is a movement in prices shown graphically on a candlestick chart that some believe can predict. So take note, predict, the word predict. So it is not really predicting but reacting on the price action. So if you saw a candlestick pattern, so let's say we have a doji, then that means you can react on that specific time frame and on that price action whether to go long or short. If we are on a downtrend, then you should look for a short, and if we are on an uptrend, then you should look for a long entry. Okay, so you are not just predicting, you are reacting on what the price is doing on a particular market movement. So this candlestick pattern is very useful, especially if you are trading it with the right context. And the recognition of pattern is subjective, and programs that are used for charting to rely on predefined rules to match the pattern. So just like what it said here, we should have rules to match the pattern. So we can trade on candlestick alone. We should have rules-based scenario before entering a trade. So let's now look at some of the most common candlestick entry patterns. So first we have the spinning top. So this candle is just like a doji. So this candle is neutral. So that means if the price is going up like this, and then if you saw that the price or the candlestick is forming a doji right here, so that means it's neutral. It can go up higher. It can go higher, or it could start a pullback. Okay? Hello, Tony Kasukog. Yeah, we will show how to use the entry candlestick pattern later on a live chart. Okay, so the next candlestick pattern is the doji. So here, just like what I said, doji. So spinning top and doji looks the same, but the doji only has a thin body like this. Unlike the spinning top, it has a thicker body like this. But once you saw the entry candlestick pattern that is forming like this, then you should be preparing for a trade. Because once a candlestick pattern showed, that means there's some buyers or sellers that are now participating or being active on the market. So let's say, for example, the price action is going up and then the price started to pull back. So we have our previous resistance here, so we can draw a zone like this. So later I will teach you how to draw support and resistance zones. So once the price pull back on this previous resistance, so this may turn into support, right? So that's the basic idea of support and resistance. So once the price reach the support level, and then once you saw that a doji is forming or a spinning top is forming inside this support zone, then that means someone is buying in this support level. So you should be prepared on going long because the price could start going up again for a trend continuation. All right. And the next one is the white Marubozu. So this one is a bullish candle, and this is a good entry candlestick pattern if we want to look for a buying opportunity. So let's say the market is going up like this. We are on an uptrend. So let's say we are on an uptrend. The price started to pull back. So we can expect for this pullback to end on a support zone, right? And once the price reach a support level and the white Marubozu showed up, that means we have some order block right here, and an order is being placed inside the support zone. So and like what we have on a doji and its spinning top, we can expect for the price to continue going up once this candlestick pattern appeared. And the opposite is true for black Marubozu. So this one is a bearish candle, and to use this entry candlestick pattern, we should look for a trend before committing to take a trade. So for example, we have a black Marubozu, which is a bearish entry candlestick pattern. We can use it on a downtrend, and when the price started to pull back and showed us a black Marubozu, we can expect that the price can now go down, or it will likely to continue going down. And we can also use these entry candlestick patterns on a consolidation. So let's say the price is just consolidating on our support and resistance zone. So every time that the price reach the support level, and then every time that you saw, let's say, a doji or a marubosu inside this zone, then that means the price could react into the support level, and we can expect for it to continue going up again up to this resistance. And once the price reach this resistance level, and if we saw another marubosu or another doji right here, then we can expect again to have another pullback into the support level. Okay, so the next thing is hammer. So this is one of my favorite. So hammer, other traders are just calling it pin bar. So it looks like this. So this is very, very useful, especially if you are trading on a support and resistance zone. So let's say we have a support right here. And then once the price form a doji, or once the price form a hammer, then this is the right timing for us to look for a long trade, because the price could go up once an entry candlestick pattern shows itself like this. Okay, so for bearish, we have an inverted hammer, or other traders calling it shooting star. So it is just the opposite of a hammer. So it is what we can call an inverted hammer, or we can just call them pin bar. So every time that you are seeing a price action like this, or a candlestick entry like this, so this is what we can call a pin bar or a hammer. If the price is inverted, then we can call it a bearish pin bar or an inverted hammer. Okay, we can also have the hanging man. So it just looks like a pin bar. So this right here, starting from hammer up to the shooting star, they look the same. Just a candlestick that has a body and a long wick at the bottom, or a body and a long wick at the top. Okay, so let me show you the real life example of that candlestick pattern. So here, for example, on the Aussie yen, we have a downtrend right here. As we can see, the price is forming a 1, 2, 3 pattern. So this pattern, I will teach you this one on our upcoming webinar. So stay tuned for that. And then the price pullback started to create a pullback right here. And then as we can see, after pulling back into this, so let's just assume that we are just here right now. Don't mind this one for now. We later we will talk about that. So once the price pull back into this previous support, so we can see that we have a previous support right here, and we can expect, of course, if the price pull back like that, we can expect for this previous support to become resistance. And as we can see, we have what candlestick entry is, or what candlestick pattern is. We can see right here. Can you put it on our live chat or on our chat box? So what type of candlestick is this? Is it pin bar? Is it marubosu? Is it an inverted hammer? Hello, Bobby Linton. Good evening to you as well. So Kevin J. Cabonegro said it is a doji, as well as Dio Shoye. So how about the others? Do you think it is a doji candle? And once we saw a doji candle, do you think it is a good entry candlestick for us to look for a short trade, because we are on a resistance zone? So do you think it is a good timing for us to take a short trade? Yes or no? So a lot of you said that it is a doji, and you are right. So again, every time that you are seeing a candlestick like this, we can call this a doji because it is just a thin candlestick pattern. This one is the pin bar, right? Because it is thicker, it has a thicker body than this one. So every time that you are seeing a candlestick like this, then this is what we call a pin bar or an inverted hammer. But every time that you are seeing a candlestick like this, we can call it a doji because it is thin. Okay? So if you think that it is a good timing for us to look for a sell entry or a short trade, then you should wait further. Because again, going back on our graphic, it is neutral. Okay, so we should wait further. But other traders wants to be aggressive and they are instantly taking a short trade right here, and there's no wrong for that. It can also be done. But if you want to be precise on your trade, then you should look for another entry candlestick pattern aside from a doji. Because once again, it is a neutral candle. So let's wait. If we can have another entry candlestick pattern inside this resistance, then we can look for a short entry. So the next candle, so as we can see, just like what we said, this is an undecisive candle and we should look for another entry candlestick pattern. And the next candle is a big green candle, and this is not a good candlestick yet for us to look for a short trade. And then the next candle, so this one, what do you think? Is this a good entry for a short trade? So what type of candlestick is this? Do you think it is a doji as well or a marubosu? So what do you think? And if you think that this is a good candle, do you think it is a good opportunity for us to look for a sell trade? So other traders said that it is hammer and other traders call it pin bar. So you are both correct if you said that this is a hammer. This because this is in fact an inverted hammer. And do you think it is a good opportunity for us right now to look for a sell trade? Do you think it is the right time for us to look for a short trade? Yes or no? So Dayo Shiyoyes said that yes, we can take a sell trade right now because of this entry candlestick pattern. Yeah, we can also call it shooting star, like what Kahneman said. So what do you think? Is this a good opportunity for us to look for a short trade right now? So hopefully you said yes, because if you said yes and you are right, this is a good entry for us right now, and let's see if we can win with this one. So of course, there's no 100% in trading. We can still lose even if we combine all of these things together. So what we can do is to put our stop loss just above the range or above the zone. And we can, let's just say for the sake of example, aim for a 1:1 risk to reward ratio. So now that we are in, we took the sell trade after seeing this pin bar or this inverted hammer. Let's now see if we can win with this one. Okay. So as we can see, the next candle is still trying to go up. So this is normal because of liquidity. And the next candle, so there as we can see, this is a huge red candle, and this is another entry candlestick pattern for us because this is a Marubosu, right? So as we can see, we are now moving closer on our take profit level. So let's see if the price can reach our target. And true enough, we can see that this candle right here reach our target below. Okay, so as we can see, that's a good sell trade for us. And having these patterns, which is combining the resistance and the candlestick pattern, showed us a good trade for us for a short trade. Then as we can see, the price goes down up to this level, and we can aim for at least 1:2 or 1:3 risk to reward ratio. Okay, so in this case, we won 1:2.85 risk to reward ratio. Okay, then as we can see, the price continued to go up, and we saw another entry candlestick pattern right here, which is an inverted hammer. And after reaching, I believe there's a resistance on the left. So let's see. So here, as we can see, we have a resistance zone right here, and then this candle appeared. Then after this candle was formed, we can see that the price goes down again. All right, so that's how we can use the candlestick pattern to look for a buy or sell trading opportunity. All right, so now that we know how to use, so now that we know what is a candlestick and how it is working, the anatomy of it, we also learn some of the most common candlestick patterns and how to use it. Now the question is how to look for support and resistance. Okay, so hello Joyce Briones, we are so glad that you are learning with us. So now that we know how to look for entry candlestick pattern, let's now dig deeper on what is support and resistance. So simply put, an area of support is where the price of an asset tends to stop falling. So that means that if the price is going down and then the price reacted a bit, so let's say the price formed a pin bar right here, so we can expect that this level or this zone could be a support level, because as we read right here, it is a price of an asset tends to stop falling. So we can expect for the price to stop going down once a support level was hit. And a resistance is where the price tends to stop rising. So if the price is going up and then it starts to go down, and we saw, let's say, a doji around this zone, then we can expect that something is happening inside the zone, and we can expect for this to become resistance. All right. So let's take a look at our live market. So here we have support zone down here. So let's say here we have our support zone here. So just like what we studied, support again is the price of an asset tends to stop falling. So as we can see, this price action is continue making a lower highs and a lower lows, right? It is forming a trend, which is a downtrend. But once the price reach this previous low right here, the price is stopped to go down instead of forming a new high, a new lower high right here, and instead of going down further, we can see that the price didn't do this move, right? And the price stopped from going down because we have a previous low right here, and we can expect for this level to become our support because the price formed. So what we can see here, the price formed a pin bar inside the support. And once the price or once a candlestick form like this, we can expect for it to go up, and we can expect for the price to break its previous highs that we have right here, which we can call a market structure or a break of market structure. But the first thing that we should consider is once the price reach a previous low right here. So as we can see, we have this previous low. The price is just going down and just continue to forming a lower highs and a lower lows. But once the price reached this previous low, then the price showed us a pin bar. Then we can expect for the price to treat this level as its new support, because our previous support is right here. We also have a support right here. And then the price, as we can see, instead of doing this, the price is stopped going to go down. The price stopped going down. So that means this is a possible support level. And for resistance, so let's try to look for a resistance level. So here we have a zone inside this range. So this is just consolidating. So let's just look at this price action for now. So this is what we call a consolidation, right? And a lot of traders or a lot of institutions are taking either a buy and sell at the same time, a buy and sell order at the same time here. So that's how institution works. And once the price, let's say they have a buy entry here, but the price went down, so they will mitigate this zone, and we can expect for the price to come back into this resistance level. So let's see. So here we can see that the price is starting to create a higher highs and higher lows. Then we can see here that the price after reaching this level, we can see that the price formed a pin bar, right? Or an inverted pin bar or an inverted hammer, right? Here, as we can see. So we can expect for this zone to be our new resistance, or to still be respected as a resistance, because as we can see, this is our previous resistance. So we can still expect that once the price reach this level again, we can expect for the price to retest this and still respect this as its resistance zone. And again, just like what I said, this is what we where we can expect that some institutions are mitigating their buy entry, because they are losing here. Because if some institutions bought here, they are of course losing here. So what they will do, what they tend to do, is to mitigate their position here, their buy position. They will mitigate it, and once the price reach this level again, then they will close their buy position and they will sell that position. And because of that, the selling pressure is going high, or it is becoming higher. The selling pressure is becoming stronger, and because of that, we can expect for the price to go down because of a strong supply. Okay. So by the way, this is a 1 hour time frame I am using from 517 5717. Sorry. All right. So going back, so after the price reach this level, this resistance, we can see that we have an inverted hammer right here. So because we saw this inverted hammer inside this resistance, we can now expect that the uptrend move will stop inside this range, because as we can see again here, resistance is where the price tends to stop rising. Okay. So because we have a zone back at this previous data, and the price is going higher, then once the price reached this resistance, it stopped and it formed an inverted hammer. So do you think this is a good selling opportunity because we are on a resistance zone? So if you said yes, then you are right, and we can expect for this one to go down. And true enough, we can see that a new downtrend started right after this resistance was reached. All right, so that's basically that's the simplest explanation of what is support and resistance. So if the price, as we can see here, the price started to react into this level. So the price is going down, right? The price beginning at this point, the price is going down, and then once the price stop at this level, and then the price form another pin bar right here, and we also have Marubosu, or we can also say that this is an engulfing bar or an engulfing candle inside this zone. So we can expect that this will be our new support, because it is stopping to drop, or the price is stopped to go down once it's reached this level. And if we zoom out the chart, we can see that this is also a previous support right here. Okay, so that's how we can combine, or that's how we can read the chart. We can use the previous data. We can look at the left, and we can use some previous support or resistance level for us to be able to identify where the market structure are, or where the market structure is lying. Okay, and of course we can see that this support held, the price went up, but unfortunately, we reach this mitigation point or this resistance zone. So this, and once the price started to go down again, we can see that the price breaks this level, and we can expect for this previous support that could be our next resistance or our latest resistance. And as we can see, the price went up again, reached this previous support, it became resistance, and we can see that we have another entry candlestick pattern here, which is a doji or an inverted hammer. But this inverted hammer has a large body, so some other traders doesn't consider it, don't consider it as an inverted hammer. But for the sake of example, let's just say that this is an inverted hammer, and as we can see, the price continued to go down. Okay, so basically that's how support and resistance works. Once the price reach support or a resistance right here, it will stop to go higher. It will continue to go down. And once the price stop from going down, then we can assume that there's a support right here. And once the price goes up again and stop at this level, then once again, we can use this as a resistance and so on and so forth. So basically, that's how support and resistance works. Okay. So to answer your question, Tony Kasukog, yes, I am trading the daily time frame for the directional bias, especially if I am swing trading. But if you are a day trader, or if you want to trade on an intraday time frame, then you should consider using the 4 hour and the 1 hour time frame. And then you can look for your entry at the 15 minutes, 5 minutes, something like that. All right. So now that we know what are support and resistance, let's now look at the one thing to remember about them, about support and resistance. Okay? So always remember that support and resistance levels are not exact numbers. All right? So for example, we have a consolidation is happening here. So let's say we have $10 here and $5 below. So always remember that support and resistance levels are not exact numbers. So what we can do is to draw them as a zone like this, because if the price, let's say we are moving like this and the price breaks this resistance, but because we are just assuming that the $10 mark is the resistance that we should look, we may be a victim of a false breakout, and the price could start going down. So that's why it is important to look for a zone. And if you are thinking of how to look for a zone, so this is how we can do it. So going back on our chart, so let's change it. So let's try to look at the euro dollar, and let's change it to daily time frame. So here we have the euro dollar, and we are on a daily time frame. So now that we know that the price, so let's just say that we are here. So let's try to analyze this one. So now that we are on a downtrend, we can see that the price is forming a lower highs and a lower lows, right? So how to look, the question now is how to look for uh, a support zone or a resistance zone. So in this case, we should look for a resistance because we are on a downtrend. So take note of that. If we are on an uptrend, then we should look for support. Okay? Because if the price is going up, then there's a high chance that the price will continue to go up. Okay? So that's why it is important to look for a support zone. But if we are on a downtrend, then we should look for resistance. Because if the price is going down, then there's a high chance for the price to continue going down, just like what we have here. Okay, so the downtrend started here, and then we can see that the price continued to fall up to this level. So now that we know that we have a downtrend, so the next thing to consider is to look for a resistance zone. So if you are asking how to look for a zone instead of just a single line, so because back when I just starting to trade, I am only looking at a single level like this. Okay? But once I learned how to look for a zone, then I considered trading on a zone like this instead of just looking on a single line like this. Like this. All right? So now that we are here on this topic, so the question is how to look for a zone like this. So to answer that question, what we can do is to combine all of the previous support that we can see, or the resistance, the potential resistance that we can see on the chart. So in this example, we have resistance right here, right? So this is our latest resistance level, and we can also see that we have a resistance right here, or a previous support right here. And if we zoom out the chart, we can see that the price is respecting this level up to this previous support right here. So now that we identified that this is a zone, or we identified that the more touch that we have, the more reliable that zone will be. So what we can do is to connect all of these resistance levels, and then we can draw a rectangle like this. All right. So always remember again that resistance or support isn't just unexact numbers. So we should look for a zone instead of just looking at lines. Okay. So now that we know that this is where the price could go back, or we can expect that this previous support could be our resistance. So by the way, I think we will discuss it later. Yeah, we will discuss it later. So let's move on to this one. So now that we know that this is resistance, so let's see if the price could go back into it. So again, what we can do is to use our entry candlestick together with our resistance zone. We shouldn't trade on entry candlestick alone, because let's say for example the price started to form an inverted hammer right here without touching this resistance. So other traders are being aggressive, but other traders wants to reach this resistance first before looking for a trade. And there's no wrong move for that, because trading is subjective. Whatever works for you, do it, and just make sure that you are consistently trading on that same strategy on a day-to-day basis. All right, so let's see if the price will reach our resistance back, and if the price reach this level, and then if we have uh, an inverted hammer here, or let's say a marubosu, then this is a good trade for us to look for a selling opportunity, or to look for a short trade. Okay, so let's see. So this is what I am saying earlier. So as we can see, the price formed um, a doji. So let's just call this a doji, or a tweezer top. So if you think of taking a short trade here, then it is up to you. But other traders, again, they are waiting for the price to reach this resistance before looking for a trade. So let's see. So there, as we can see, the price is now struggling. So the price formed another lower high right here. So we can draw another resistance here. So what we can do is to look for this first resistance. If the price showed a good entry candlestick pattern inside this zone, then we can take a short trade. But if the price breach it, then we can expect for the price to head higher up to this second resistance that we have above. All right. So let's see if we can have an entry candlestick pattern inside this first resistance. So here, do you think this is a good sell? The price created an inverted hammer inside our first resistance. So do you want to take a short trade here, or do you want to wait for retest on onto our second resistance? So other again, this is subjective. Other traders are being aggressive and they are already looking to take a short trade here, but other traders are conservative and they want to for the price to test this second resistance above. So let's say that we took this sell trade. So other traders are saying no, while other traders are saying yes in our live chat. So that's normal. And again, technical analysis is subjective. So whatever works for you, be consistent on using that strategy. Okay, so let's say we took a short trade here. What we can do is to put our stop loss above the zone. And let's try to look for this support down here. And let's try to make it as our target. All right. So in this case, we will have a 1:1.86 risk to reward ratio. So if you are the type of trader who is conservative, then you will already look for a sell trade inside this first resistance. But if you are the type of trader who is more of a conservative trader, so if you are aggressive, you will again enter here. But if you are conservative, you may want to look for the price to reach this resistance zone, this second resistance above. So if you want to take a trade here, then your risk to reward ratio will be higher because this previous support down here will be your target. So in this case, we will have a 1:2 risk to reward ratio. So again, this is subjective and it is up to you whether you want to look for a trade inside this first resistance and then combining it with an entry candlestick pattern or wait for the second resistance. So that's that move or that same that both trade is correct. So there's no wrong with that. All right, so let's see if this trade will work. So there, as we can see, this first resistance was broken, and then we can see that the price went back higher into this second resistance that we have. So that's what I'm explaining earlier. It is up to you whether you want to be aggressive or conservative. Okay, so if you want to be conservative, that's very normal. If you want to be aggressive, that could also work. All right, so now that we have retest on our resistance zone, let's now wait for an entry candlestick pattern. So there, do you think this one right here is a good entry? Because this is an inverted hammer, right? So do you think this is a good sell trade? So if you said yes, then you are right and you can look for a sell trade right here and we can put our stop loss above the zone and we can make this support down here as our target. So having said that or having this kind of strategy, let's now take a look if the market will go down on our favor. So there, as we can see, we already have a red candle. And there, true enough, we can see that the price went down. And the price even breaks this previous support. So this is a classic example uh, of a resistance trading or a support and resistance trading. So we can be profitable just trading solely on this strategy. All right. So moving on, we are now on the topic of once the price passes through resistance, that resistance could potentially become support. So this is what I am saying earlier. And if the price passes support, that support could potentially become resistance. So looking at this example, we can see that we have support and resistance right here. Then we can see that the price breaks this resistance, right? Again, if the price passes through resistance, means that if the price breaks a resistance zone, then that resistance could potentially become our new support. And true enough, we can see that after breaking this level, this resistance zone, we can see that this resistance we have again shown right here. It is not a single line. We can see that the price went back into it and it became our new support. And then after breaking this resistance again, this previous resistance, the price went down again into this level, and as we can see, it became a new support again for the price, and the price started to go higher after reaching this resistance back down here. So let's try to look at the live chart. So this one is a good example, by the way, because as we can see, this is a previous support, right? Because the price stopped to go lower, the price started to go up after reaching this support down here, and then as we can see, the price breaks it with this candle. So again, this is a previous support. So we can draw it like this. If we look onto the left, this is a previous support, but unfortunately, the price breaks it. So once the price breaks this support, so as we can see here, again, if the support breaks or if the price breaks support, or in this example the resistance, that resistance could become new support, and the downtrend, once the price breaks support, that support could become resistance. So as we can see on our live example, we can see that the price breaks the support. So we can now assume that this will be our next resistance, and we can expect for the price to pull back and then continue to go down once the price went back into this resistance level. So that's a classic example of previous support that is turning into resistance. So once again, if we are on a downtrend, look for a resistance zone because the price has a tendency to go down further. But if the price is going up, we should look for a support because there's a high chance for the price to go even higher. All right, and for our resistance zone, so for an uptrend example, let's try to look at a bullish market. So let's see if we can have a good sample. So here, as we can see, this is a good example for a previous resistance that could potentially become support. So as we can see, we have a zone right here, right? So this is our zone. So we have our support zone or our resistance zone right here. So we can draw it like that. So this could potentially become support because the price breaks this level with this candle. So as we can see, we are now on a 1, 2, 3 pattern. So what we can expect for this previous resistance is to be the new support for the price. So what we can do is to look for a pullback like this. And then once we have an entry candlestick pattern inside this zone, let's say another pin bar, then we can expect for the price to go up. All right, so let's see if the price could go down and if the price can pull back inside our support zone. So here, as we can see, the price is now starting to go down. And there, as we can see, the price reached our support, but we don't have an entry candlestick pattern yet, right? So let's just wait further. So here, this is like a pin bar, right? So do you agree that this is a pin bar or you want to wait further? So if you want to wait further, that's also fine. That's fine. But if you want to be aggressive and treat this candle as a pin bar, then you may look for a buy trade, and you can put your stop loss below the zone, the support zone, and we can make this, let's say this previous level right here as our target. So this is our latest resistance, right? Our latest high. So we can assume that the price will retest this resistance for our possible target. So let's see if the price could go up. So there, as we can see, we reach our target after having the pullback, from this previous resistance, it became support. And then we saw an entry candlestick pattern inside the support zone. And we can see that the price reached our resistance or our previous high. And it is now again acting as a resistance because as we can see, it is forming another inverted hammer. Okay, so once you saw that the price, so let's say for example, you have a buy trade below here and you saw that the price started to go up. And then once you saw that the candle is forming like this, then you can exit your buy position or your long position. Okay, so basically that's how we can trade support and resistance zone. So if you are wondering where to look for an important level, such as this one, or how to look for an important structure, so we will tackle that on Friday on our next webinar. So stay tuned for that one. All right, so moving on for our next topic, we will talk about trend lines and channels now. So having learned that the price tends to have a higher high and a higher low. So by the way, a higher high and a higher low means that the price is forming a high right here. And then once the price breaks this level, the price will create another high. And this will be our new high, or we can call this as a higher high. And we also have a low right here. And then once the price pulled back and this previous resistance became support, and if the price started to go up again, and this new low will become our higher low. So now that we know that pattern does exist, so we can draw something like this to have a trend line. So let me just draw it clearly. So if the price is forming a higher high and a higher low like this, we can put a trend line into the lows, and we can also expect for the price to bounce off of this level to become our support, our new support. Okay, so this is where we can combine support and resistance, support zone and a trend line. So we can, let's say for example, we have a zone right here together with trend line. So we can use the support levels for us to have an opportunity to go long. All right, and we can also use trend line to look for an entry candlestick pattern. And for a downtrend, the same is true for a downtrend. So let's say we have a lower highs and a lower lows. So we can draw a trend line. So this is our resistance zone. So this is our resistance zone right here. And in this example, we can see that the trend line is lining up with our resistance. So if the price pull back again, so we can expect for the price to pull back into our resistance zone together with the trend line. So the higher the confluence or the more the confluence, the better the trade will be. So we can combine trend line and support and resistance zone together with entry candlestick pattern to have a more reliable trade. Okay, so combining all of this together, we can have a more profitable trade, and we can expect to be consistent on our result. So in this example, we can see that we have higher highs and higher lows right here. So what we can do is to use a trend line and draw it like this. So uh, take note that if we can combine two touches, then that means that's a valid trend line. But if we can combine three touches, then that's a strongest or a stronger trend line. Rather than having two, we can look for three touches, something like this. As you can see, we have three touches here. So in this example, this is a more reliable um, trend line zone rather than having just two like this. So as we can see, we can combine this trend line together with this support zone down here, right? So, but unfortunately, this trade didn't go as planned, or we won't have an entry candlestick pattern because we only have a doji right here inside our support. So this is again, this is just a neutral candle. So we don't have an entry candlestick pattern inside our support and the trend line. So if you took a buy trade here, so you will lose, and that's normal in trading. So that's why we need to manage our risk. But you get the point, you get the idea. Combining this trend line with a support zone is a good confluence for us to look for an entry candlestick pattern, and then we can take a long position or a buy entry inside this range or this zone. All right, and for a downtrend, we can also do it here. So let's see if we can have a good sample for this one. So this one could work. So as we can see, we have first touch here, second touch here, and then once the price reach this resistance level or this resistance zone, so assuming that we are just right here, so assuming that the price could go up into this resistance zone and it is lining up with this trend line, so we can expect for the price to go up into this zone. And once we have an entry candlestick pattern inside this zone, so again, it is combining the trend line together with the resistance. So to make this complete, we should look for an entry before taking a short trade. So that's basically that's how we can use trend lines. All right. So we can use it whether it's up or down, or if the market is going up or down. And we can also use channels. So channels means that if the price is again forming a move like this, we can put our lower channel down here while putting our higher channel down here. And we can use this to have a counter trend trade. So for example, we have this uptrend. So for example, we have an uptrend. We can draw our channel like this. And if the price pull back into this support, so let's say the price pull back into this resistance and it became support. And if we want to look for a target, we can make this trend line up here to be our target, or we can also look for a selling opportunity inside this higher channel, because we can expect for the price to go back down again and reach this trend line again before continuing to go up. So for if you are the type of trader that you don't want trading against the trend, so what you can do is to use trend line or channels for target. So let's say, for example, the price went down into this trend line. So we can expect for the trend line to act as a support. And let's say we have an entry candlestick pattern here. You put your buy entry here. You put your stop loss down here. So now the question is, having a right placement for your stop loss, what you can do is to look for your channel, your higher channel, to be your target. So this could be your target, and we can expect for the price to go up into this channel, this higher channel, before pulling back again. So before this pullback could happen, you may exit your position above this zone. So that's how we can use trend lines and channels. All right. And for the last point that we have today is the trading oscillator. And trading oscillator is an indicator that gravitates between two levels on a price chart, and it is measuring momentum for a design. It is designed to show when an asset is potentially overbought or oversold. So overbought and oversold simply means that if the price is going up, again, if we have an uptrend, so we can expect that the price will, or we can assume that the price will start going higher like this once we have, or once we saw that the price is overbought. So let's say, for example, we have an RSI indicator, and then the indicator is, or the RSI is showing us like this. So once the price pull back like this, and then the price continued to go higher, we can expect that this could be our potential resistance, or we can expect that a mean reversion or a pullback could start right here once we saw that the oscillator is right here at the top, which is an overbought level. And we can also use this strategy, let's say for example, we have a support zone here. The price went back inside this zone, the support zone, and then at the same time, we can see that the oscillator is going down inside this um, lower oscillator or this lower band, whatever it calls. Then we can expect that this pullback will end at exactly this oversold or this oversold zone, this oversold level. Okay, so we can combine all of these things together. So for example, we have our support zone, and then we have our RSI. The RSI is now overbought, so we can expect for the price, because we have overbought, we can expect for the price to end its impulsive move at this resistance. And once the price pull back, and once the price reach our support zone, together with our RSI going down, we can see that this is an oversold level. Together with our price action reaching the support zone, we can expect for a continuation to the upside because the RSI is oversold. Again, to make it simpler, we can use our RSI as an overbought and oversold indicator. So once the overbought or once the RSI goes into this overbought zone, we can expect for the price to go down. And then once the RSI went down into this oversold level, we can expect for the price to go up. All right. And if we look on our live chart, so let me just pull up the RSI. So if you want to pull up your RSI, just click indicator, then type RSI, and then click this one, the relative strength index. And then as we can see, we have our overbought and oversold level down here. So this is our overbought and this is our oversold. Okay. So we can expect the simplest form or the simplest way on how to use this is if the price is going up and then the RSI gets to an overbought level, we can expect that the price will go down. And then if the price pull back and then the RSI went down into this oversold level, we can expect for the price to continue going up because it is already oversold. Okay, so let's try to look for a live example. So let's see if we can have one right here at the euro dollar. So this is best use, especially if we are on an uptrend. If we are on an uptrend, you can start looking for the price to go down into this overbought before taking a buy trade. But for the sake of this webinar and for the sake of example, let's just look for a good example that the price is going down while going oversold. Okay, so this one is a good example. We can see that the price goes down, and then at the same time, the RSI is oversold. Okay, and as we can see, combining all of these things together, we have support zone down here. We have an entry candlestick pattern. So as we can see, we have an entry candlestick pattern here, and at the same time, the RSI is oversold. So we can see that after reaching the support, combining with this indicator, we can see that the price goes up. Okay, so basically that's how we can use oscillator or an RSI indicator. All right, and here in this example, we also have another good example. So we can see that the price is going up. Here it is going up while the indicator is showing us an overbought level. Then after having this together, we can also see that we have an inverted hammer here. Then after that, we can see that the price went down. So basically, that's how we can use overbought and oversold level. So in our next webinars, I will teach you uh, how to use more of this, how to use more of this RSI or how to use other indicators. So please tune in on our next webinars for you to be able to learn how to use the right indicator, the right tool, how to read the market structure, and for you to be able to learn how to use or to how to locate the right placement for your stop loss. So all of those things we will talk about that together on our next webinars. All right. So having said all of those things, so again we learned the anatomy of the candlestick. We learned the most common entry candlestick pattern, some of the most common. We also learned the importance of support and resistance. We also learned that support and resistance isn't just a single line, it is a zone. We also learned that once the price breaks a support, it will be our next resistance. And once the price breaks resistance, it will be our new support. And we also learned the trend lines and channels. And we also learned how to use an oscillator, in this case, an RSI. So the setting for this RSI is just the default setting. All right. So having said all of those things, let's now move on our Q&A. So if you have some question, you can put your question on our live chat. On our live chat. And stay tuned at the end of our webinar. Again, I will ask you a question related on our topic today. And again, put your answer together with your live trading account number for you to be able to qualify on our next draw on Friday. Okay? So if you have some question, you can put it on our live chat right now. Hello, Princess Conrado. So thank you for the compliment. I appreciate it a lot. As well as Venancio Junior Arenas. So by the way, I think Venancio Junior Arenas is the winner from our previous draw. Let me know if I am correct. Please, let us know if you are the winner from our previous draw. I think you are the winner. Again, congratulations to you for winning our previous raffle. Hello, Dayo Shoyoye. He is asking if we can have different account for different strategies. Yeah, that could work as well. You can create multiple demo accounts, and then you can test different strategies with those different demo accounts. Hello, Tony Kasukog. Yeah, we can also use divergence, but unfortunately, divergence trading isn't part of our webinar today. But to give you some insight of what a divergence is, it is something like if the price is going up like this, or if the price is forming a higher high and a higher low, while the RSI is showing a, a lower high like this. So this is what we can call a divergence. And we can use this as an indicator that the uptrend is losing its steam. And we can expect that the reversal will likely to happen. So if this happened, so let's say that the RSI is forming lower highs while the price is forming higher highs, we can expect that the price will continue to form a double top, and we can expect for the price to break this previous low that we have down here. So basically, that's how we can use divergence. Okay, so any question? Hello, Sir YJ007. So the best time frame for scalping, I believe, is 1 hour and 5 minute time frame. You can combine those two. You can look for your price action for your resistance and support zone, and then you can look for your entry at the 5 minute time frame. Hello, Venancio Junior Arena. So thank you for confirming that you already received the $100. So we are very glad for you having us on our program. And again, congratulations. Yes, Tony Kasukog. We can use it, the divergence, we can use it in trading reversals. Hello, Rodrigo Herrera. So if you invest a small amount and if you are not trading, then of course you will not earn. You need to trade for you to be able to earn on your capital. Hello, Kevin J. I am trading at the London and New York session. So London session will start at I think 3 p.m. 3 p.m. and then the New York session, if I'm not mistaken, will start at 9 p.m. and then it will end at 5 a.m. if I'm not mistaken. So between 3 p.m. and 5 a.m., I am looking for a trading opportunity. God's time, there's no best time to trade. It is solely up to you. If you want to trade the Tokyo session, you may do it. If you want to trade on the Sydney session, you may do it. If you are like me, who are taking my trades on London and New York session, then that's also fine. And if you want to know what is the time for those sessions, you may want to look on our previous webinars. I discussed those sessions on our previous webinar. Okay. Hello, Manuel Dule. So he is asking if we can look at the dollar yen. So let me know if daily time frame is okay with you. So let's try to look at the dollar yen. So here, by the way, dollar yen is what I sent on our Telegram channel. So if you want to be a part of that Telegram channel, you may uh, look for the description below and you may join us on our community. So you will receive chart like this, an analysis like this, and you may also receive the latest news about what is happening. So by the way, NFT, I also sent the NFT release. It is coming this Friday on our Telegram channel. So going back for the dollar yen, so the price reached an imbalance zone right here. We can also see that this is a support zone. Okay. And the price started to go up, but the price rejected this previous support, which is now acting as a resistance. So because we have a downtrend here and the price is continuously making lower highs and lower lows, so we can expect unless we saw a break of structure right here, we can still expect for the price to go down. It will break this support and then this support will turn into resistance and we can look for an entry pattern inside this resistance zone and we can expect for the price to continue go down. Okay, so that's my analysis for the dollar yen. All right, so any question? Hello, Aishwarya. What you need to do is to put your answer on my question later together with your live trading account number. So if you haven't done yet, you may sign up on our website to have your own live trading account. All right, and you may also use AllJM100 for a promo code if you sign up. All right. Hello, Tony Kasukog. Thank you very much for your comment. So we appreciate it a lot. And please join us on our upcoming webinars because we will give you more of this, and you will have a chance to learn to win some prizes. To have if you finish this entire webinar, you will have a certificate coming from OctaFX ourselves. Okay, so I'm glad that I am able to bring value to you. So please be join us again on our upcoming webinars for you to have more of something like this. Hello, Binancio Junior Arenas. The link for our Telegram channel is located at the description box below. Okay, so any question before we move on my question? Hello, Aishwarya. So unfortunately, you need to have your own live trading account number for you to be able to participate on the draw. So if you put the right answer without your trading account number, then unfortunately, you will not be part of the draw on Friday. Hello, Princess. So please stay tuned for our upcoming webinars. We will update you if we will have a Tagalog webinar. But so far, we will still continue to conduct our webinars in English. All right. So if you don't have any question, let's now move on my question. So the question is, what is the type of price chart used in technical analysis that displays the high, low, open, and closing prices of a security for a specific period? Again, what is the type of price chart used in technical analysis that displays the high, low, open, and closing prices of a security for a specific period? All right, so you may now put your answers together with your live trading account number. Okay, so I will still give you some few minutes because other traders are putting their answers, but it is not appearing on our chat box. So please make sure that your internet connection is stable. So I will still give you 5 minutes. And don't forget to put your trading account number. You can put your answer multiple times if you think that your answer isn't showing up on our live chat. So please wait for a few minutes before putting your answers again because maybe the reason why your answers isn't showing is because you are commenting all at the same time. So I will still give you some few minutes for you to be able to put your answers. So here, for example, some of you answered earlier, but it just showed after 5 minutes. So please wait for a while because maybe there's something wrong on the YouTube server on the YouTube live chat because you are putting your answers or you are sending your answers. All of you are putting our answers together. So maybe the server is working on it. So please wait for a minute. I will still give you few minutes to answer my question. So don't worry, we will wait for you. So some traders here can still see their answers. So I will still give you few minutes. So again, we would like to invite you to join our Telegram channel. It is dedicated for OctaFX Filipino community. Hello, Julie Egloso. Yeah. Yes, your answer is visible. For John Michael Mendoza, your answer isn't popping up yet. So just wait for a few minutes. Hello, JP Ramos. Your answer has been recorded. You're very much welcome, Sir Venancio Jr. Arenas. So I hope we see you again next time. So by the way, our next webinar will be on this coming Friday. So I will still give you few minutes for those who are still asking about their answer. Hello, Aldron. The promo code is PaulJM100. Again, it is PaulJM100. Okay, so let me try to show you my screen for you to be able to see if your answer has been recorded. So here, as you can see, this is what I can see. So in my end, this is what I can see. Hello, Aldron. The promo code is PaulJM. So please take a look if your answer is right here. So let me scroll it up. So here I will now scroll down. So take a look if your answer has been recorded. Hello, God's time. So thank you for confirming that you saw your answer. Hello, John Michael Mendoza. Your answer is now recorded. So please take a look on my screen for you to be able to see if your answer has been recorded. It's Paul JM100, not all JM. It's PAUL JM100. So thank you for asking, Julie. You're very much welcome, John Michael Mendoza. Hello, Julie. I will put the promo code. So there, it is Paul JM100. All right, so I will give you last 3 minutes before we end this webinar. No worries, Julie. You're very much welcome. As well as Dayo. So no worries. It is our duty to bring value to you. So don't worry about that. Hello, Ben Calvin. So let me take a look on your answer to confirm. So there, our moderator said it was recorded. So last 2 minutes for our traders for you to be able to participate on our Q&A. Okay, so last 1 minute. All right, so that's it for our today's webinar. So we want to thank every one of you again to who joined us for today's webinar and for today's lesson. So once again, this is Paul Mendoza, your trading speaker. See you again on Friday for our next live trading.